The crypto market feels a little weird right now, right? Kind of sleepy, a bit uncertain. But what if I told you that according to one analyst, something absolutely massive is building just under the surface? Today, we're going to break down his theory that Bitcoin is a coiled spring just getting ready for a huge pounce.
And yeah, he is not messing around with this prediction. He's calling for Bitcoin to hit $150,000. We're not talking about some distant, far-off future either. We're talking by the end of the first quarter of 2026. It's a massive call for sure, but what makes this whole theory so interesting is where it's coming from.
That's the same analyst, admitting he was totally, publicly, and very recently wrong about a call he made. So this isn't just some random hype. This is a thesis that was born from getting punched in the mouth, taking a step back, and really trying to figure out what the hell is going on. And that humility, that self-awareness, that's the key to this whole story. So here's how we're going to break this all down. First, we'll get into the big call itself. Then, we're going to investigate the market shock that really changed the game for everyone. After that, we'll nail down what Bitcoin's true identity is, uncover the forces that are coiling that spring, and wrap it all up with why your mindset might just be the most important thing through all of this. All right, let's jump right in. This whole theory really hangs on what the analyst calls the pounce moment, and it's built on this really fascinating mix of, super high conviction on one hand and a really healthy dose of humility on the other. So the core idea here is that all this quietness in the market, it's just a big illusion. The analyst is convinced that the big money, we're talking the huge institutions, the massive hedge funds, they're all just sitting on the sidelines, watching and waiting for the perfect moment. And when they finally decide to move, it's not going to be a slow, polite entry. It's going to be a pounce, it's going to happen fast, and it's going to be on their terms, not ours. But to really get why a pounce could even happen, we have to understand why the market is so jumpy and hesitant in the first place. And for that, the analyst points to one specific, really traumatic event that he says left a deep, deep scar. This quote basically sums up the feeling during what he calls the October 10th debacle. And get this, he argues this event was a bigger deal psychologically than even the FTX collapse. Why? Because it wasn't a scandal you could point a finger at. It was just a sudden, violent, after-hours crash that came out of nowhere. It felt completely random and uncontrollable, and that's what shattered the market's confidence. So that shock didn't just tank prices. It caused what's called market structure damage. Now that sounds technical, but it really just means the market's psychology got broken. People got scared, they're way more hesitant to buy dips, they're much quicker to sell at the first sign of trouble, and they just don't trust the old patterns anymore. And this fear, it's actually a key ingredient for what might be coming next. So if the market is damaged and basically running on fear, how do you even begin to analyze what its next move is? While the analyst argues it all starts with using the right lens. You have to understand what Bitcoin truly is, and just as importantly, what it isn't. You see, so many people try to compare Bitcoin to the NASDAQ, but the analyst says that's a huge mistake. It's the wrong lens entirely. Bitcoin isn't some sleepy index fund. It trades with high voltage, It's like a top-tier momentum stock on steroids. When these kinds of assets get hot, they absolutely fly. And when they get sold off, like we saw recently, they get taken to the woodshed. You have to understand that volatility to understand the asset. Okay, so let's put the pieces together. We have a fearful market and a super volatile asset. This brings us right to the core of the whole theory. These hidden forces that are winding this spring tighter and tighter and tighter, just building up pressure for a massive release. Now, before we get to all the exciting upside, we have to address the elephant in the room. The question on everyone's mind is, with all this fear and volatility, couldn't things get worse before they get better? Could we see another big drop first? And here's where that nuance comes back in. He fully admits that another drop, maybe a retest of the recent lows, is absolutely possible. But he makes a critical distinction here. Don't confuse short-term pain with the long-term thesis being wrong. He's still completely confident about the final destination, even if the path to get there is going to be super rocky. And that destination, once again, is a price target of $150,000 by the end of Q1 2026. This confidence isn't just a gut feeling. It's all tied to that huge institutional demand that's waiting in the wings, plus a whole set of really powerful external forces.
So what's the rocket fuel for this potential pounce? Well, the analyst points to a world that is just flooded with cash. We're talking record government spending, huge deficits, this massive AI investment arms race, record tax refunds. He calls it general stimulus vibes. All of that liquidity, all of that cash has to find a home somewhere. And that's the kind of environment where an asset like Bitcoin can really, really thrive. So we've got the market conditions, we've got the macro picture, but you know what? Understanding the charts and the economy is only half the battle. The other half is the mental game. It's all about what's going on between your ears.
This is such a critical point. The narrative, the story people believe about the economy, can be way more powerful than the messy, confusing data. We're so back, or it's so over. Those simple stories can cause wild swings in the market. And the really big moves often start when the story and the reality are completely disconnected. And he really argues against that feeling of hopelessness that can creep in when things are tough. Hardship in markets isn't some sign that the game is rigged against you. It's a totally normal part of the process. Surviving those tough stretches, well, that requires a kind of temperament that can just outlast the day-to-day mood swing. And this is really the core message on mindset, a victim mentality, blaming the boomers, blaming the Fed, blaming the system. It's a recipe for failure. The successful attitude is acknowledging that, yeah, things are hard, but still believing you can get a hit. It's all about agency and taking a proactive approach to your own success. Okay, so let's tie this all together really quick. We started with a market that's basically paralyzed by fear after a major shock. We learned that Bitcoin doesn't trade like a boring index. It trades like a volatile, high-momentum asset. And while more short-term pain is definitely possible, the long-term trend looks up, supported by huge macro forces and all that institutional demand waiting on the sidelines. But to see it all through, you have to have the right temperament for the journey. And that leaves us with one final question for you to think about. If this theory is right, if Bitcoin really is coiling up for a massive move, what's the one signal, the one piece of data, the one chart pattern, the one headline that would tell you the pounce is finally here?